We're going to start with the dollar yen here on looking at this chart here. If I zoom out and take a longer term view of this market, we can count a number of different times when the market has tested this trend line. One, two, three, and now four. We're testing this at the 80.03 level, folks, and if the market should break above the 80.03 level, we're going to have additional resistance against this trend line here, and then the 100-bar moving average, not to mention the 80.24 level. What's the 80.24 level? If I go to the daily chart and look at the 2010 low price going back to November 1st of 2010, that low came in at 80.24. We're back. We've been staying below that level the last couple of days, kind of wandering below that level, stayed above the low going back to May, and now trying to move a little bit up to the upside. If we break above this trend line, that would be our next target. That would, and a move above that level would get us above the 100-hour moving average, which is significant, and also above the 80.24 level, and that'll open the door for further upside momentum. But the first things first, we've got to get above the 80.04 level or 03 level. If we get above that level, above that trend line, and stay above that level, we should see further upside momentum. If the market fails to get above this line right here, then look for a rotation back down to this trend line at the 79.88 level, and a break below that level. Could see another test of our floor here at the 79.68 level. Once again, the May low came in at 79.57 or 56. That would be another target on the downside. So everything's riding on this trend line right here. Get above it, get above this 11 level, get above the 24 level, and it opens up to the window for further gains to the upside. Speaking of testing key levels, I'm going to go to the euro versus US dollar and also take a long-term view of this over using an hourly chart, taking a look at the last few weeks. The last few weeks have been in a nice up channel here. You can see how the number of times the market tested the top side of this channel. 1, 2, 3, 4, 5. Moved a little bit above here. Failed. Held it there. Moved down. Moved up here. Broke above that level. Then came down to 38. Well, a little bit less of the 38.2% retracement. Moved up to a new high test of the upside here in yesterday's or Tuesday's trading. Today on Thursday, market had a high here and then spent most of the day coming down here. The market on the move to the downside here did some damage. What the damage did we do? We went through the 100-hour moving average and this trend line, folks. That move below that trend line and the 100-hour moving average is significant. And but what did we do? We went down to test the 38.2% retracement of this move up from just this low. The last time the market was a 100-hour moving average to the high, and went down, tested that the level, got within maybe about 10 or 15 pips of that level, and then started its move to the upside here in the Far East session. So now if I zoom in here, we're just above the 100-hour moving average at 036. We're just below the trend line at 18.19. If the market should move above this 19 level, we should see higher prices in the euro versus US dollar. If we're not able to move above it, in fact, if we fail here and start to move back below the 146 level, we could see a rotation to the downside here, and we could see an extension of the trading range for the week. And I'm going to go to the daily chart here, and I'm going to show you the trading range for the week. It's 139 pips. 139 pips from a historical standpoint for a week's trading range is too narrow. That is, it's the most narrow trading range since 2007. So I do expect that the market is going to have an extension either to the upside or to the downside here. And we are closer to the downside, so it seems obvious that the market should go to the downside, but that's all going to be dependent upon what happens here, what happens on the hourly chart against the trend line, against the 100-hour moving average. If we're able to move above here, we can change the bias quickly from being bearish to bullish on the failure of the move. So pay attention to these levels, folks. It could be important here for the euro versus US dollar. The sterling versus US dollar is also at key levels here as we enter the Far East session. We're in between the 100 and 200 bar moving average. That's what I call in between the goalposts. Typically, when the market is in between these two moving averages, it's not undecided of which way it wants to go. And you could see that by looking at the ranges here over the last 6 or 7 days. The market's been up, down, up, down, up, down, and consolidating. We have a nice little bottom channel on the bottom side. We pretty much have a ceiling up at this level. So what we're going to be looking for is either a break to the downside, a break that's going to take us below the 100-hour moving average and then below this trend line, or we're going to see a break to the upside, which is going to take us above the 200-hour moving average and then potentially above these trend lines up to these highs right here, perhaps even to the trend line that the parallel trend line that parallels this move right here. So that's what the sterling versus US US dollar is looking like. Let's take a look at the dollar versus Swiss next, and this currency pair. Look at the narrow trading range here on a relative basis to what we've been seeing here in the market. Very narrow trading range for the week here at the lows. The market is at a crossroad here. Does it want to break below this trend line and move even lower here, or do we want to form a bottom and move to the upside? The non-trending nature of the current week is saying it's coiling. It's coiling for a move, and you can see this on the hourly chart. This is 1, 2, 3, 4. This is our 4 trading days for the week. Most of it done on Monday, or actually this is Friday. This is Monday, Tuesday, Wednesday. This is Thursday. So narrow trading range after the sharp sell-off on Friday. We have a decision to make, folks. Are we going to break above this 100-hour moving average, and are we going to break above this topside trend line and move above the highs for the week to head up toward the 38.2% retracement, or are we going to stay below like we have here and rotate back down through our bottom channel here and break through our double bottom that we have for the week? I do expect, just like the euro versus US dollar, to see an extension by the end of the week. Which way is it going to go? You follow the lines, follow the technicals. Technicals are going to tell you. Listen to what they have to say. Don't try to predict. Listen to what they have to say, and hopefully you'll get a nice trend move, a move away from these levels as you're going to see an extension in one direction or the other. So watch the key levels. Pay attention to what they have to say. The New Zealand, they kept their rates unchanged, didn't they? Let's take a look at that chart. The central bank kept their rates the same. However, they commented that the country's commodities remain very strong, and this sent the Kiwi surging to the upside. We've broken above this trend line here, which had a number of different highs along here, and the break above that trend line at this point right here has sent the market to the upside here, and we're looking for further momentum to take us above the highs for this move here. If the market is not able to get above those highs, then we could see some disappointment. But right now, the bias remains to the upside above this trend line. If we move back below this trend line, we could see disappointment and move back toward the 100 and 200 bar moving average, and perhaps even toward the bottom end of this channel trend line. This is a breakout here, folks. It needs to break out and stay out, and in order to do that, we're going to need to see further momentum in the direction of the break. And since we're at the highs, we're going to need new highs in the New Zealand versus US dollar as well. So there you have it. A look at some of the major currency pairs. Thank you very much for coming in.